Hey, thanks, Sam. And thanks to all of you for tuning in today. This is going to be a quick 1-hour webinar that will bring you up to speed on the changes under Regulation X that relate to homeownership counseling requirements. And for those of you who keep track of the big picture, and I'll bet that's all of you, you have to keep track of the big picture and the details, you know that there are actually homeownership counseling changes under both Reg X and Reg Z. But the homeownership counseling changes under Reg Z only relate to high-cost mortgage loans and certain loans to first-time borrowers that might involve a negative amortization feature. So we thought it was a good idea to carve this up and have a standalone short webinar that dealt only with the Reg X homeownership counseling changes, because for those of you who don't make high-cost mortgages and don't believe you'll be making them in the future, these are the provisions that will relate directly to you. So we're going to tell you everything you need to know about the new requirements. They came about as a result of amendments to Reg X by the Consumer Financial Protection Bureau, which now has jurisdiction over RESPA and Reg X. And in the course of this seminar, you're going to hear about the new front-loaded requirement to provide a list on virtually every RESPA-covered loan. There are two exceptions we'll talk about, to applicants within 3 business days of receiving an application. You're going to be giving them a list of homeownership counseling organizations. So that's the basic overarching principle, and we'll get into the details. Over on page 2, just a quick review. RESPA's been around since 1974. It's only recently transferred from HUD to the CFPB. To interpret it, you've got the regulation, which implements the law, and you also have other documents that from time to time will be published by CFPB in the Federal Register, and anything that's published formally by them that states that it's an interpretation, interpretive rule, or so forth will be used to inform your knowledge of what's required, what's prohibited, and so forth. You know, RESPA's whole purpose is to help applicants for home mortgage loans to understand what the settlement costs are going to be, and then when the transaction actually closes, what those settlement costs actually were. And they've broadened it over the years. It also includes the prohibition against things like kickbacks and unearned fees and excessive escrow balances. But when they made the January 2010 changes, they also got into some things that weren't strictly settlement cost related. But that's basically what RESPA deals with. And now, with this new requirement, they're broadening it even further, getting into the whole notion of giving information to applicants up front about possible homeownership counseling. But before we get into the new list that you'll be providing and the timing and all that, let's just go over what is covered by RESPA, what's exempt from RESPA, so you know exactly when you'll be giving this list. Jack, how about leading us through the scope of Reg X?
I'd be happy to do that. Mary Beth, on page 2, the original Reg X took effect on June 4th, 1976. I always like to point out that Reg X and I grew up together. I started my career as an examiner on May 10th, 1976. And at that time, a compliance exam was a couple of schedules that went at the very end of the safety and soundness exam report. and they were generally prepared in the last hour before you left on Friday to go home. And none of the old guys that had been doing this stuff for years wanted to mess with the compliance stuff, so they gave it all to the new guy who knew absolutely nothing about it, but gradually started to figure it out. So, yeah, we grew up together. Scope rules, there are no changes in the scope rule here. As Mary Beth pointed out, this new list of counseling organizations has to be given on all RESPA-related transactions. And as she also pointed out, there's a couple of small exceptions we'll deal with later. But basically, RESPA, the existing requirements, the new requirements, apply to federally related mortgage loans. And we have the definition of a federally related mortgage loan on page 3 and page 4 and the very top of page 5. Let's start part of the way through. If you look at the bottom of page 3, small Roman numeral 2, the term we're looking at here is federally related mortgage loan, and small Roman numeral 2 deals with the federally related side. Pretty much every lender out there does federally related loans under one piece of this or another. The first item A under small Roman numeral 2, says you're federally related if your deposits or accounts are insured by any agency of the federal government. So if you're a bank and you have insured deposits, that connection alone makes your lending federally related. Let's say your bank or your holding company owns a mortgage company that does not have deposits. Well, they're not federally related under item A, but they may be under B or one of the other methods. B says if your loan is made in whole or in part, or is insured, guaranteed, supplemented, or insisted in any way by HUD, well, that connection makes you federally related. And it continues on. Over on page 4, if your loan is intended to be sold to Fannie Mae, Ginnie Mae, Federal Home Loan Mortgage, any of those groups, makes you federally related. Even if you don't originate loans for sale or insured or guaranteed by any instrumentality of the federal government, if you're a creditor and you generate $1 million or more of RESPA-type loans in a year, that connection alone makes you covered. And there are some other bases at the bottom of page 4, top of page 5 where it catch you, but the ones we've covered already, you are federally related. Now let's turn back to page 3. The first part of the definition is pretty critical. You've got a federal-related mortgage loan. If you got a first or subordinate lien, generally the lien status doesn't matter here, and it involves residential real property. Now, the residential side, if you look at small Roman numeral 1, items A and B, it indicates you got to have a 1 to 4 family dwelling or a manufactured home. And in either case, you have to have the real property or the land. So if you got a house and lot, mobile home on a lot, anything on a lot, you're pretty much covered. 1 to 4 family dwelling, manufactured home, and the land in either case is covered. Now, if you have a loan that is secured by a mobile home only, you got the mobile home security agreement on mobile home, but there is no real property involved. You don't have real property as collateral. RESPA would not apply. You got a residential loan, but it's not a mortgage loan. Got to be residential mortgage loan. Now, in addition to the basic rules of coverage, we have a long list of exemptions. And again, these haven't changed, so we can breeze through these fairly quickly. If your property consists of 25 or more acres, no RESPA. If your loan is primarily for a business, commercial, or agricultural purpose, no RESPA. Now, years ago, there used to be some small differences between what's a business loan for RESPA and what's a business loan for truth in lending. Those differences were wiped away when they added language to RESPA saying, in determining whether it's a business purpose or not, just look at the rules of Reg Z. And at that point, on this issue, business purpose, the rules became the same. Item 3 talks about temporary financing. Mary Beth, I don't know about you. This is one I'd always like to see them clean up.
Me too.
If we could stay with the first sentence, we'd be pretty good.
Yes.
All right. Exemptions include temporary financing, such as construction loan. Boom. End of story. We're out of here. But then they go on and explain the exemption does not apply if the loan is used or may be converted to permanent financing by the same lender. I always kind of back into this. If you want your construction loan, your temporary loan to be exempt,